afternoon. Thanks to the clients and partners who have joined us. This is the 4th day of our conference, and this is one of our last presentations. And of course, we wouldn't end it without a debate on distressed investments. Alexandre Cruz, founder and partner of Jive Investments, and Rafael Fritsch, partner at Canvas Capital. Thank you so much for taking part in yet another leg. Ale, could we start by talking about Jive's figures? How much have you raised? What are the returns? What are the areas Jive has been operating in? Thank you, Camila. Good afternoon, everyone. Once again, it's a pleasure to be here. And I have shared a panel with Rafael before. Every year, Laik gets better and better. But this year, you have an additional year with the online tool. It's really amazing. And I'd like to extend my thanks for yet another opportunity. I've got a slide for you because it's easier to answer your question with that. This is an alternative investment platform. We build our manager together with the service platform so that we could have the technology and the vertical not only to originate, price, and acquire, but to do the onboarding and unlock the value that all distressed assets have without depending too much on external work, especially at the core. We have 7.3 billion of assets under management split into 3 billion, 500, 175, and 3.5 billion. We're at the last stage of divestment, so we've given back 1.6 times the capital that they invested. So 24% return, annual return since 2015. We still have considerable assets in there, and we hope to deliver twice the money that we promised. And we're very happy so far. Fund number 2, not only were we able to make good investments, we've invested just over 2 billion reais, so we used our capital recycling capacity that ended in October last year, which makes diversification and our ability to multiply the money and return and good returns much safer through that recycling. So 16.6% annual return. And that's very good because this type of fund moves sideways or even downwards in the first quotas. In the short term, you usually take at least 20 months to buy and receive. So having such robust return at the beginning of the fund is fantastic. And fund number 3 has returned 18.5% returns a year. We have 155 employees. The only thing I know for sure after all this crisis is that you need more people, more technology. The team that grows the most is the innovation team. We've been making heavy investments into technology. We have our own technology called JiveSoft based on connections with startups, which do part of the work very, very well. We've teamed up with them for APIs, and we're investing with them, actually, in 2 platforms which we use for financial ERP and workflow. Our investor base is there, about 1/3 and 2/3, split between onshore and offshore. Our local investor base is all private through an amazing partnership we have with Credit Suisse. And we have traditional endowments, Canada, US, Middle East, and some countries in Europe. Our structure has grown considerably, and it has allowed us to continue in investments with scale, because at the end of the day, the best investments happen with scale. So investing more funds, more tickets at a time gives you cost reduction, increases your return. It's not just capital capacity, because that's almost become a commodity here, but also people and technology. So this platform we are building will be our main differentiating factor, along with our culture. Rafael, what about Canvas? Good afternoon, everyone. Thanks again for the invitation. My name is Rafael Fritsch, and I'm going to share a little bit about Canvas Capital and our credit funds. I just want to clarify that we are undergoing a silent period because we have an ongoing fundraising process, so we can't do anything in terms of sales efforts, marketing efforts, especially with some specific funds. So I just wanted to go on record with that material fact. Canvas has a family of funds. We've been working with credits for quite some time. I'm just going to share my screen with you so you can see what credit means at Canvas and explain to you what we do and how we do it. It's a quick overview of Canvas Capital. We have roughly 12.5 billion in assets under management. We're an independent manager, as you all know. We work in 3 business areas: credit, multi-market, macro, global systematics, and pensions, which has been growing over the past few years. Our investor base is very capitalized. A third are foreign investors. We have digital platforms, family offices, private banking, and pensions, as I mentioned. Just to remind viewers of what Canvas has been doing in the past 10 years, and our credit team that actually has been together for over 10 years. In 2011, you might remember a product that was distributed with hedging Griffo. We raised roughly $150 million at the JGP Canvas Distressed. It was a closed fund, one of the first in the country, and curiously, that fund will be closing in the next few months. In 2012, we had excess liquidity and bonds. We opened the JGP bonds, which focused in high yield with higher risks. And in 2013, when the IOF, which was 6%, went down, we opened the main global distress funds allocators here in Brazil. And in 2015, we opened the Special Situations Fund, another distressed fund, as well as a global bond fund, which is a high-grade bonds, making the most of that opportunity. It was an honor to take part in your event then, which was about, there's nothing more interesting than buying Petrobras, Banco do Brasil, and Itaú bonds, which 2 years earlier had been one of the main investments a lot of people had made. We're going to talk about market conditions and COVID, but 2015 is a year that many people will remember because of those opportunities. 2017, we went through another fundraising round, another distressed fund. 2018 again, a new year with new opportunities, 2 more distressed funds. And 2019, 1 more new fund due to a new market condition, which I'll touch on down the line. Do you want to have liquidity or return? Because you can't have both any longer. So a lot of people had to understand that the hard way. If you want liquidity, you have to let go of returns. If you don't want to have liquidity, you can have good returns. I think the market has learned that now. So to conclude this introduction, we have been growing slowly. Credit in Brazil isn't an easy business. Even though there are many opportunities, we've been increasing our committed capital. As I said, we're undergoing a silent period because of our ongoing offering, but we've launched 9 funds in the past 10 years. We have a team dedicated to credit, and credit is an asset class that offers a very interesting risk-return ratio here in Brazil. Thank you. I remember that during the last like, the topic was, is it the best vintage, if 2020 was going to be the best vintage for distressed investments? And I remember you disagreed at the time. So let's start with Rafael. How do you see the credit market last year? How do you see it now? And what is the reflex of that on the distressed market? I think anyone who was able to predict COVID, in addition to having a crystal ball, had the opportunity of a lifetime of doing unprecedented things in the market. COVID made oil become negative. Nobody could have predicted that. So when you think of a crisis, of a pandemic is a crisis, the first thing you need to think is about the market liquidity and how you're going to position yourself in that market. I used to joke that if in January 2020, Alexandre, myself, everyone wanted to buy federal bonds, we were willing to pay the highest price. And these assets in the past 10 years, people were paying over 90 cents of the par for these federal bonds. I'd never seen that, but this was January 2020. At the end of March 2020, a Petrobras bond was trading at 75 cents. So the first thing we need to think is, what happened? Was it Petrobras risk credit that changed? Was it the situation? Was it the liquidity in certain markets that changed? And my analyst is looking at these bonds, and you can buy a Itaú bond and Petrobras bond at 75 cents. The only thing that changes is how you see what's happening around you, that you're not just looking at the same thing every day and not adapting your business to it. So we like to believe that at Canvas, we are a best opportunity fund. So we do the three classic things, which is assessing a business, assessing the company's capital structure, the company's credit, and whether it makes sense to have a new position with that capital structure. The second box are those bonds. Federal, which is what we like to do, and then state and city bonds. And the last one, legal claims. Advanced legal proceedings, and it's more likely that you will get that credit. And that's what we do. At Canvas, we don't do anything different to that. But I always have to look at those three boxes and see what's changing. Obviously, single name will have more liquidity because you have equities in the stock exchange, bonds in the stock exchange, and they change every day as a matter of minutes. So we need to work out where you are in the cycle, if you have liquidity in that cycle, and how that can affect your investment. Because there's something in Brazil that will never help you: time, value, or money. Time in Brazil is very uncertain because it depends on the judiciary, it depends on many different events, so it's harder. So you need to feel more comfortable with the value and where you are. Like last year was very interesting. I said I didn't think 2020 was going to be a wonderful vintage. And how wrong was I? Because with COVID, everything changed. Everything was repriced. Precatorial bonds were being traded at 90 cents. And within a year, you bought it for half the price. That's how dysfunctional the market was. So looking at where we are now, because there are many challenges ahead of us, you can never forget The macro, we have a new bankruptcy act that just passed. There's still vetoes, so it can still change. And we'll only clear that when the Supreme Court rubber stamps the decisions. We have COVID, we have the new variants, we have vaccines, and there are many industries that closed down for 9 months. We don't know whether they'll be supported or not. Look at what's happened in the DI market, the interest rate market, the foreign exchange market. That's all going to affect our investments. So this is a very interesting point in time because we'll have lots of opportunities. COVID is a fact. It destroyed a lot of value, but it's also allowing people to try and rebuild that, to go back to being functional. But there are many challenges. Our macro environment is very challenging. The world is very challenging. We have a new bankruptcy act. What's interesting about looking ahead is that Brazil is an emerging country. It hasn't emerged yet. There are lots of problems here. COVID has increased the problems, which entails many opportunities. So if you can find the opportunities, price the opportunities. Price is what protects you. You cannot get prices wrong in Brazil because the secondary market is very tough unless you go to a market with more liquidity, which I'll talk about later. But in the distressed investments universe, this is a great time. You have good opportunities, many opportunities, lots of uncertainties, which makes it challenging. But with challenges come opportunities. Ale. I wanted to disagree with Rafael, but it's not going to happen. Actually, there was a joke on WhatsApp. He said, you were right at the last like, because I said it was going to be a good vintage. Obviously, he was joking, because it's been very tragic. But as a comedian, he's a great distress investment manager. So I agree with Rafael. So I want to answer that from two perspectives, internal and external. When the lockdown started, I didn't believe that COVID would be as bad as it was, that measures would be as strict as they were. We had 200 million investment proposals. We had some ongoing advanced negotiations. And we stopped them because we needed to understand what was happening. We have a town hall halfway through the year. So we try to talk about what's happening, and at the end of the year, we do an off-site retreat, and we have monthly mini town halls. We did it weekly, practically the whole year, because it was like driving a car in really thick fog, like you couldn't see anything a meter away for the first 2 months. So we left our cash in the fund to try and understand the situation. And after things went on and we realized that, tough as it was, especially in humanitarian terms, there were many opportunities. So we put our foot down and we speeded everything up. So we ended up investing 2.1 billion, which is a huge figure. In 2019, we invested 930 million reais approximately. So it was great. And it was great to remember something we'd never forgotten. When the claims or registered warrant bonds pays more than you think, we try to find opportunities beyond the blue ocean ones. Our knowledge about the judiciary, we have a predictability algorithm, time to win. It really sets us apart. So we try to buy claims whenever somebody who's selling it is running a risk or anticipate bankruptcy. And it was very important to us to see that. If we were able to provide that return in Fund 1, was over 20% a year, and that's what we wanted to give to our investors, how companies that were suffering in 2014, 15, 16, and 17, that huge crisis we went through in Brazil, can you imagine investing in companies that didn't have any pre-COVID problems, no cash problem, no management problem, no result problem? And COVID, unfortunately, was so global that you don't need to try to guess. We at Jive don't need to try and guess what the new normal will be like, or try to invest in technologies or in companies in industries that will be very affected by this so-called new normal. Quite the contrary. We'd rather take an apparently very good vintage, because these were companies that didn't have all kinds of problems and stopped paying for the service of their debt and had a capital structure problem. No, these companies have consistent results, have had it for decades, and they weren't ready, like any other company wasn't ready, to have their revenues dropping, no liquidity for a year.
Still on the same note, there was this very interesting live session with the CEOs from Santander, Itaú, and Bradesco, which was put together by Credit Suisse. These are the three largest private banks in Brazil, and they said that unlike other crises, where the economic scenario declined gradually and banks could reduce their credit lines, the risk they had, what happened was that the crisis went about outside the banking system, and then they had to rush to adjust their credit lines for individuals, for corporations. And they even came as far as to praise the president of the Brazilian Central Bank on the acts that he implemented. So we saw all-time highs quarter over quarter, which prove that there is a great opportunity for us to use this credit. Aside from that, I believe these opportunities will come in waves. Credit lines are being created little by little because no economist or no banking institution really knew what was going to happen and to what extent they would have to renegotiate these debts. So there are different vintages that are being assessed, and we believe this should go on for the next 1.5 years, and we're ready to help those companies and those families to have more access to liquidity. We know people have high hopes regarding the vaccine, and we even came as far as to expand our team. We invited new people to help us because we understand that companies need to be prepared. And if we compare our Fund 1 vintage with this one, then Fund 3 will show more opportunities for companies that will surely recover. During this mandate, we have hired people who have proven experience in this market. And not only do we want to buy these new credits, for companies that are in distress, but we can also lend money to these companies. Because we do want to make good use of this opportunity and this privileged position we are at nowadays. Real estate has also posed greater prizes to us. At Jive, we've done that before. Real estate accounts for more than 50% of our portfolio. We're trying to recover these distressed assets too. Now, finding out what can be solved and what can't, and at what cost, that is something that we did before, and banks had to take a lot of real estate as collaterals to the loans they provided. According to the Brazilian Central Bank, 17 billion real is how much real estate is worth, considering real estate under power of Caixa Econômica and Banco do Brasil. So there's a great opportunity right there. And if you consider that we had tax issues or fiscal problems before COVID, well, the changes in the legislation helped us sell real estate. States and banks were not made to solve the problems we find with real estate. So that's what we wanted to be ready for. We believe that legal tax, fintechs have been playing a pivotal part, and they will grow even further because of the technology that we were forced to use, both on an individual and on the corporate level. In Fund 3, we had the opportunity of buying equity, buying startup companies and platforms so that we can invest in claims and in credit, which is basically our mandate. Great. Rafael, my question is regarding funds at the beginning of the pandemic. Did you have any funds back in the day? And you know, when you talk about future opportunities, when you talk about past opportunities from 2020, there's a lingering question from our investors. What about credit that was bought before that? How do you think these credits will perform? Well, yes, we did have some open and closed funds back in 2020. We had 3 classes of funds. One was a high yield fund for credit, a B360 fund, which was high yield, which has some risk to it, but not distressed risks. We had some distressed funds that had higher liquidity, and we also raised $500 million for this third fund 2.5 years ago, and it was getting to the end of its period of investment. So we began the year 2020 expecting improvements. Not sure you remember, but the future of Brazil was quite promising back in late 2019. We had hit 100,000 points at the Brazilian stock market, and suddenly things happened. So I did what I did in 2007 and in 2003. So to invest in assets, I started demanding 3 levels of approval because during the pandemic, liquidity is of the essence. So if you want me to invest in a sugar and ethanol plant, the returns have to be real high. Because before, we could buy bonds at 130%, at 130 for 75. Itaú bonds dropped 30 points. We can compare that to a sugarcane plant, right? So this came as no surprise. That's why we started investing in bonds with higher liquidity and in companies that we thought that were too big to fail. So we stepped back and we started accessing industries that we thought were not going to be that affected by COVID. Airlines, for example. Airplanes didn't fly. What about hospitalities? Hotels were empty. So unfortunately, at that point, we just didn't want to invest in those companies. We looked at the most resilient industries, you know, electricity. So amongst these companies, which ones are we going to invest in? So we ran intense analysis of the power, energy, our energy industry. We looked at oil and gas industries. I mean, can Petrobras go broke? Or even in the financial market, can Itaú or Bradesco go broke? So the first half of 2020, that was our strategy. We wanted liquidity. We didn't want to go to court because of anything. I mean, we got papers with high liquidity that are paying 20% of return in dollars. So that's what we faced in the beginning of last year. And then as we moved towards the end of last year, we know that, the whole year was very uncertain. Some cities were going on lockdown. We didn't know if governments were going to release the economic relief. We didn't know what the results of the American elections would be. So differently from Alexandre, what we did in-house was different. We invested very little in distressed bonds. We didn't want to depend on the recovery of our economy. We wanted to prevent tailwinds. We were confident for some deals, but for most of these deals, we were not. So that's what we thought of. I mean, are we striking the best deal we can? Is this deal going to be available next year? Because, there will be many distressed bonds available in the future. Think of the Twin Towers back in 2001. The best deals were bought in 2003 after that. Same thing happened when we had the subprime prices problem in 2007. You could buy the best assets only in 2009, 2 years later. So, maybe we can push it a year or so and then reassess those bonds. But unfortunately, for some industries, this assessment will go worse. But for some industries, this will be better. Azul bonds went from 1 to 0.3. I think Azul is a great company. They've got great aircrafts. However, the Brazilian scenario goes against them. Think of Varig, Transbrasil, BRA, Avianca. These are all former airline companies that no longer bonds that can go down to zero in very little time. Brazil is a very large market, but we got very little or very few stakeholders, very low liquidity. Brazil is one of the countries where it's hardest to recover credit. Our judiciary branch does not lend. Well, interest rates are low now, but they used to be the highest interest rates around the globe. Bloomberg states that real is seen as the worst valued currency in the world. And, I'm an economist. And I remember when Antoine Actamel coined the term emerging countries. That happened 40 years ago, and 40 years later, here we are. We are still an emerging market. But what does it take for a market to be classified as an emerging market? You need economy that is semi-open and high levels of risk, and that's what Brazil is. Now, to end on a high note, risk can bring about great results if you're careful enough. So what we did in 2020 was to assess the external scenario. Since there was a lot of turmoil and uncertainties, well, despite always being obliged to handle uncertainties, we know that there are some opportunities out there. So we were careful enough because there were many new elements we had to assess. Fiscal issues, tax issues. And the beauty of it is that, unfortunately, this market does not have many players to it, unfortunately. If Alexandre and I go broke, I'm not sure what is going to happen because amateurs won't survive in this market. I mean, I wish there were many other players. I wish there was a secondary market to the country. But when you ask foreign people if they want to invest in distressed bonds in Brazil or in the United States, what do you think they prefer? Of course, they want to go to America. So yes, this is a promising vintage, but there are many challenges tied to this process, which is similar to other emerging countries. Well, for Rafael, the best vintage is yet to come, it seems, right? Well, not really. I think buying Petrobras at 0.75 real was amazing. It is now worth 120 cents. 2020 was great for products with high liquidity. So there were great opportunities back in the day. Now, if I may add to that, for those of us who are watching us, who are excited about investing in the stock market, let me tell you, I was very excited because I saw Mr. Xavier and Stolberg, who were excited and optimistic about Brazil. I think I should study more to be as optimistic as they are. But let me tell you, at the beginning of the pandemic, the stock market reached 100,000 points. Then it peaked to 6,000 points. It is now above 115,000. So 100 to 60 to 115. So we are above the pre-pandemic era. If we think of credit, we started at 100, we got to 60, and then we reached 85.9. So there is still a long way to go with regards to credit so that we can go back to normal. And distressed bonds, well, there were good opportunities, but they were also challenging because when it comes to distressed bonds, we've got no liquidity or lower liquidity. There were 2 asset management companies that went public this week, so there is liquidity in Brazil. But it's hard to see that reach the high-grade investments as well as the high yields and fallen angels. Distressed bonds are usually the last investments to have access to the capital they need to recover. That's why I think it will take at least 2 years for us to get back on track. I'm not sure last year was the best one. I'm not sure this year will be better or if next year will be better, but I do agree with Alexandre. I think we're going to see great volumes for quite a good time. All right, Alexandre? Well, before COVID, we had made lots of investments, and COVID was a great test. What we invested before COVID, especially in Fund 1, where we were divesting, we're still trying to solve problems and get back to the market to strike new deals, to sell new assets. So yeah, that was a major test for us. And we did way better than our best expectations. When it comes to credit recovery, we only strike a deal where there is a robust structure in place so that the economic incentives of this deal are great. So great that even those who are in debt want to pay for them. So if the debt is worth 20 million and we found assets that are worth 10 million reals, then we do the math and we'll see if we'll be able to achieve those numbers and if we'll be able to solve the problem of those real estate assets. Let's say we hit a match at 7 million real. We'll only do that if the debt is worth up to 5 million and the person or the owner agrees with us so that the agreement or the deal may be done. And then if this person pays in time, I mean, we can give them a buffer time of 30 to 90 days with a 2% interest rate fee. But if this is paid in time, then we'll give it a discount so that they may pay 3 instead of 5. So this is great business for the payment to be done. And sometimes it's good business for us if they go into default, because then we'll have a debt that is worth 5, but the collateral will be 7.
But with COVID, we wanted to see if that was going to work, because we thought of that for a crisis, obviously not such an acute crisis, but we had 0.3% default. And since everybody paid within that window, it was even better because we had that 2% fine plus the interest rate. So whatever wasn't possible, we renegotiated because we didn't want to overdo our position. And in terms of real estate, we bought distressed real estate, so we paid very cheap prices. And I agree with Rafael, you have to be neurotic about price. You can bet the best executor of all, have the best platform of all. If you bought it expensive, you can't turn it into a good deal. So it's after you buy the asset. So after you buy a real estate asset and you deal with all the problems, environmental problems, area overlays, after you buy it, so you take on the risk, and then you have the cost and the time to solve all those problems. Before you leave the problem, there's still a great deal of space for the end investor or user to buy it, the faster you sell the asset. And in this fund, we don't want to run the property risk because that has a 20% a year. That's the cost. So you need to believe that it's going to pay you more than 20% a year if you're going to sell later than that. So we sell as soon as we've solved all the problems. Often for fast investors because they can pay upfront. And that was a great test. And it showed that when you buy cheap and you solve or nearly solve all the problems, and with a great track record of keeping our promises, delivering on results, we could buy the real estate and the payment plan for these agreements. And they're being paid on time, and that was great. As for judicial assets, including claims, on the one hand, we depend on the judiciary, and that stopped. So despite the delay in many different areas, others were working through Zoom, through Teams, and that increases efficiency because you don't have to fly somewhere and wait to present your evidence and to explain your arguments. So I think all the assets passed a great test. There was that huge noise about the change in rules about paying claims. We didn't go crazy because we think that the risk of a change in the rule, even though 20 years went by without that, has always existed and always will. So you have to have the right structure and pay the prices within a well-priced portfolio, a well-constructed portfolio that allows you to, if that happens, you can continue to pay out good returns despite the risk, because there will always be a risk. And the more tax difficulties you have in a country, the more likely these things are to happen. So we overcame the toughest obstacles with the assets we bought in 2019, and we're very, very happy about the results. We're coming to the end of our panel, Alexandre, and could you, in 1 or 2 minutes, talk about the role of startups in revolutionizing access to credit and being able to scale up opportunities, as well as in finding assets? Our mindset is very much one of open innovation. We don't think the best ideas come from within Jive. So we've created a very open ecosystem, and we work very closely with legal techs, fintechs. We have just over 24 partnerships where we buy data or APIs. Part of that work is done by a startup, and we started investing through them as well. Startups that would generate credit and so on. And we thought that was so important and so much a part of the future that Jive should be a part of and should be positioned and will have the best opportunities, that we chose to take that path. We have claimified, and we're trying to understand how we can do in retail what we do wholesale, how we can provide liquidity to SMEs, to families that have claims, that have opportunities, that have consumer rights, class actions, tax, how we can provide that to these guys, a right that they're entitled to. I know it sounds counterintuitive, but if you have a lot of people with rights that haven't gone to court yet, you can do it without going to court. You can do it without filing it. A lot of people think that will increase the number of lawsuits, but that's not true. You know, judges would rather settle so that there isn't an avalanche of lawsuits. There is no other way for somebody who has an origination platform, which is to work through startups. That's key. Our ecosystem should allow us to do that. We have 3 major projects in consortium quotas, small cap claims or requests, and real estate credit or mortgages. And since there has been an expansion for the last 2 years among fintechs, that's already revealed the default. So there are some partnerships for acquisitions and other types of credit partnerships as well. Thank you, Ale. Thank you, Rafael. Thanks to our clients and to our partners for joining us.